Hello everyone, today is Friday, February 19th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. Missed last week, but we are back on track here with our usual every Friday, every weekend we do these videos. So if you're brand new to them, welcome. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. So we're going to look at performance and internals and correlations, volatility, and really sort of just pick apart everything that stands out and looks interesting. And then in part two of this video, we're going to jump into the charts, put everything from part one into context, and try and just make sense of where markets are moving and how to best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into this week's video. We had a pretty interesting and new dynamic and sort of a scary dynamic too. So we had stocks closing lower on the week, and it wasn't an extreme low close or massive selling, but stocks were down. But we also saw fixed income down. So we saw the bond market selling off as well. And actually, the bond market sell-off is certainly more aggressive. And that's an interesting dynamic for the market. And it's a scary one for a lot of people because generally speaking, the bond market is where you go when you don't have the confidence in the stock market, right? If the market's about to roll over, the equity market's about to roll over, this is where bonds come in. This is where they usually help kind of balance out a portfolio. But when both go down at the same time, and obviously this is only just a single week that we've seen this really happen, maybe a week and a half. But if this trend continues, it's sort of an interesting and again, potentially scary one for just the dynamics of this market. Meanwhile, we had the VIX kind of hovering out in the lower 20s. So the VIX seems kind of stubborn here on just it was up 10%, I think, on the week, but still, hovering in the low 20s, which is as low as we've seen it over the past year. And with what else is going on here, it is kind of a curious new dynamic that's going on. So we're going to talk about that as we go out through this video. Let's jump into the numbers first, though. Equity market performance on the right-hand side here. You can see the Dow Jones did manage to close green, just weekly so, but everything else was in the red. Notably, the Nasdaq was the underperformer this week, down 1.64%. We saw a good amount of sell-off in kind of momentum land for a lot of those high growth names were the ones that were seeing much of the selling pressure this week. And if we look at world stocks too, I think there's some notable divergence going on there. The fact that international stocks minus the United States were actually pretty much flat on the week is actually relative outperformance. So I think that's kind of notable there as well in terms of international stocks. Now, if we look at market internals, this is where we still have some positive footing. Remember, this was a holiday shortened week, so we have last Friday's numbers in here. Markets were closed on Monday, but in terms of so technically we have we're using last Friday's numbers in these cumulative numbers here, but 900 or call it 700 new highs on the week, 600 new highs on the week. That's still net 52-week highs. So that's highs minus lows. That's a strong number still. Shows that there's still a good amount of kind of small cap or just breadth participation, not just in the mega extreme cap stocks. We did see the cumulative AD line did close negative here on the week. If we look at our sort of chart of a rolling 52-week highs minus lows. So we're summing up every single day, plotting that. And this is, again, the wave of stocks that are hitting new highs minus new lows. This is still a good trend at our back here that is still pointing to the upside. So, if this continues, if we continue to see support here and the majority of the market and breadth and stocks hitting new 52-week highs, then I have to imagine pullbacks here in the market will still be kind of bought up and semi-shallow. If we start to see this roll over, move sideways, and start to decline, then we could open ourselves up to a bigger market decline. So for now, this is still a very positive note here for the market. Market internals specifically. If we look at sector performance this week, we saw the majority in the red. So we had four sectors here that were positive this week. Energy was by and far the strongest, and obviously we had some environmental factors and power outages and all kinds of stuff disrupting potential oil markets and gas as well. So XLE up 3.4%. Financials were also very strong this week, up almost 3%, followed by materials and industrials. Those were the top four, only four that were in the green. On the downside, it was healthcare, it was utilities, and technology that was in the red here. Those aren't usually ones you see all together there, stacked near each other, because you got kind of high beta mixed with some lower beta and defensive areas. So that's an interesting mix to see on the bottom. But again, with a lot of the momentum sell-off that we saw this week, that certainly makes sense. Now, if we look at correlations here, and I've had a lot of questions come through on this slide and how to interpret it and how to get the most out of it. And, there's not every week there will be something interesting on every slide, right? So sometimes there's interesting data to talk about and sometimes there isn't. And in this case, for correlation specifically, I think the two things that stand out to me here is the high stock market to oil correlation that continues to go on here. These are not always, but generally correlated, but 93 correlation here from the USO, so that's oil fund, and the Dow Jones is really strong. Goes to show that energy is certainly helping lead this market right now. It's a sector that is moving to the upside and helping support this market. So the tie-in to energy here and this market says that there's a bit of a linchpin or strong correlation going on. And then the other thing to point out is just the dollar here. So the dollar is very strongly now negatively, inversely correlated to what the stock market is doing. And this is kind of what we would expect, in fact. So if the dollar goes up, stocks go down. If the dollar goes down, stocks go up. That is back into pretty strong alignment here, 0.65, 0.7 correlation. So when we kind of think about the opening slide of how we talked about bonds not actually hedging, so if the stock market's going down and you usually go into the bond market, but if bonds are selling off too, they're no help to you. Right now in the immediate term, what this is suggesting here is if you want to hedge yourself, it's just dollars, right? And that intuitively makes sense, but not always the case. And so that dollar exposure is sort of acting as a good hedge right now for the stock market if you're thinking that we could sell off. So those are the two sort of insights that I'm pulling out of this right now in terms of strong correlations. Got some gold and 10-year strong inverse correlations going on as well. But again, leave a comment if you find anything else interesting in this. And these are correlations going back 10 days, so they're pretty short term. If we look at volatility here, really nothing changed week over week, but what is interesting, and I don't have the data in front of me to confirm this, but I did see that this is one of the widest spreads, and I could be off base on this, so again, leave a comment if you've got more info on this, but one of the sharpest spreads between spot VIX, current month VIX, and the 3-month VIX. And so it's, it could mean a few different things, but certainly it could mean some relative either complacency in the short term to, more fear and uncertainty being priced out a few months out from now, right? So that steep sort of slide here basically suggests that, and there's obviously option strategies you could use to take advantage of this. Again, not going to get into that here, but front month VIX certainly pretty cheap on a relative basis if you're looking out a few months. If we go to interest rates and credit here, this was kind of the big story in terms of the bond market weakness. We saw rates rising sharply across the board. So yields were going up. That pushes bond prices down. That's the dynamic we had this week. We also saw investment grade bonds, high yield bonds, both reacting negatively to this as well. So this here, again, is a bit of a cause for concern if this is going to continue, if the credit market and high yield markets here are, starting to sell off or see some signs of destabilization or cracking. That could, lead and continue to spill over into the equity market. So something to pay attention to for sure. If we look at dollar and commodities, we saw the dollar was down marginally this week. We saw gold down as well, silver down just slightly. Really, the biggest winner this week was Bitcoin, up 14%. So really sort of standing out by itself here. It's got an impressive 472% gain over the past 12 months. So it continues to rocket ship higher, making new all-time highs at the time of recording this. So that continues to work really well. Crude oil was down slightly, natural gas up 5%. So a good showing there, and a good showing for natural gas 1 month out, 21% gain here. So natural gas kind of quietly, staging a nice rally going on here behind the scenes. So if we put it all together and try and aggregate all of this together, we've got some mixed signals here in terms of the report card. I give it a C in terms of everything that's going on this week. I think the underlying breadth support is still nice to see. It is still kind of a confidence booster in this market here. If that starts to change, though, then things can get weaker pretty quick. But right now, breadth still on the bull case, on the bull side right now for this market. If we look at our trading systems this week, I've got a lot of long exposure, in fact. So Merlin is up to 82% exposure, so sitting with a little bit of a safety cushion, but for the most part, it's been continuing to ride out and participate in this trend. Nothing really changes. In fact, it actually picked up exposure today on some of the early weakness. And our Lamerick trading system, which is our shorter term system, so this had a series of shorts that it put on late last week, early this week. So it was able to capture a little bit of that volatility and decline, but it very quickly turned those shorts over and rotated right back to the long side. So in fact, now it is basically net long. I don't think we have any shorts on in the system right now. 7 positions, 57% invested, and not super aggressive on the long side, but it did take some shots on the short side, covered them up very quickly, and then moved back. So that's kind of the positioning there. Again, we have a lot more information on the website about these two trading systems. If you want to learn more, or if you want to get signals for the trades that we're making, click the link appearing in the top right hand of your screen. And we'll be back in just a moment now with part 2. All right, we're back here. We've got TC 2000 open. We have our equity market grid that we're looking at. So we've got the S&P in the top left, Nasdaq top right, Russell bottom left, ACWX, which is the international stocks minus the United States, in the bottom right. The price of all of these charts are the white dashed lines you see on the screen, and the multicolored dots is a smart trend filter that we've developed. It measures price and volume, helps us determine trend and trend strength over time. So we're looking at a weekly period of all of these markets right now, and you can see that we've got no change in our outlook. So stocks sold off mildly this week, but there's no change here on the weekly chart. You can see we've been in strong uptrends for nearly as long as I can remember at this point, and that continues to be the case. Now, if we go down to the daily chart, where we get a little bit tighter on the price action, things are mostly the same, mostly all bullish, healthy uptrends, except for the Nasdaq. So if we look at the top right screen here, you can see that we've moved into yellow territory here for our trend on this time frame. So again, that doesn't mean we sell everything. It doesn't mean the big correction's coming. It could mean that, but that's not what that tells us. It tells us that there's just some uncertainty going on right now. There's a little bit of weakness and some two-way trading going on right now in this particular market. Generally speaking, we give the benefit of the doubt to the prior signal. So in this case, it's up, it's higher, it's bullish. So bulls kind of have the benefit of the doubt still. And until and if we get a red dot printed here, we should, kind of continue to expect that things are glass half full when looking at this market. So that's interesting in the sense of it's showing a little weakness. It showed these little sprouts of uncertainty here over the past, 4 or 5 weeks of trading. All of them have resolved higher, but this is a sign in itself. If you continue to see weakness here, time after time after time again, it's only a matter of time before it cracks. And again, I'm not making any kind of big call there, but we're just using sort of the data here to help us make informed decisions. And that's something I think to keep an open mind about. Notice, however, though, none of the other markets are showing this yet. So everything else is still bullish. It is the Nasdaq specifically that is seeing a little bit of relative weakness here. So from our trend perspective, this is kind of the same, same direction, same outlook we've had. Basically, it's almost been the same spiel here for many months now. And if we, jump into the price action of the particular markets here and take a look at things a little bit closer, if we look at the S&P 500, for instance, I think we still have a very clean and clear level to trade against. And so we were talking about 3870 in our last video, and that's still pretty relevant. Now, you could, of course, cheat this up a little bit because you clearly got right around this, let's call it 38, where is that coming in around, 3,900. So from 3,900 to 3,870, this little band of support in here, this is basically where you want to see the S&P 500 hold above if you want to see the bullish behavior, bullish momentum, and just uptrends continue. If we start to lose this zone and we break through where we found support on these several last retests and we fall back below the prior high here from January, that would be a little bit different, a little out of character, and something to take note of. So heading into next week, we're not that far away. Basically, we're talking less than 1% is where this level, this zone comes in. And so that's where we want to see this market hold. If it can do that, and if it can continue to base up here near highs, odds favor that we will eventually break out and start making new all-time highs once again. However, if we lose this, if we see an abrupt kind of sell-off coming into next week, or something that violates this support, then that is your cue that something has changed. So that is kind of the relevant levels here for the S&P 500. I don't really think we need to spend too much extra time on this. Because as we know, the trends are still up. We still have higher highs and higher lows, but we do have this range that is developed here. And for the past, call it 8 days or so, the market really hasn't gone anywhere. It's just chopped around. And so whether or not this is going to form a continuation pattern or a topping pattern is what we're waiting for right now. So pay attention to that 3,900, 3,870 zone, and we'll see how that acts heading into next week. If we look at the Russell 2000, you've got a little more kind of shape and character here. We had a more meaningful kind of pullback over Wednesday and Thursday. So we saw basically, from its all-time highs, we saw a 4.5% pullback, which is extremely mild, but slightly more notable than some of the other indices. And on Friday here, it was up 2% on heavy volume. So this here for the Russell actually looks constructive now, where the level again is clear. It's basically Thursday's low that we want to see this market hold above. And if it can, then we have the ingredients of potentially a higher low that we can then, rally on and continue our merry way in this uptrend. If this starts to lose 219 though, if we start to fall back into this old January range, same kind of thoughts apply that we just talked about for the S&P 500. That would be a change of character, something to take note of. So for the Russell, this looks like kind of a day one springboard actionable, little pullback buy signal here. So we'll see if that continues. We'll see if the bulls can get some follow through, and then pay attention to those highs around 229 as the breakout level to watch. Now, if we look at the Nasdaq 100 here, kind of similar to the Russell in the sense of it had a more defined kind of pullback from highs. But notice Friday's action just didn't end as bullish as the Russell, right? So the Russell 2000 had a nice kind of springboard and closed towards the highs, whereas the Nasdaq attempted to challenge yesterday's highs, but then kind of failed and gave back, some of those gains from yesterday. And we also saw heavier volume come in today on the downside. And this has been a trend with the Nasdaq here. Let's add another kind of circle as we have another high volume sell-off day that has been basically accumulating here over the past couple of months. So there are, again, some warning signs, but Nasdaq really got to get below 329, Thursday's lows, to start putting in a slightly more concerning technical picture. So that's kind of the outlook there. Russell gets some good bonus points for still being very strong and wanting to continue to trend higher. Nasdaq 100 looking kind of the heaviest right now and most suspect heading into next week. So pay attention to those two. Will probably give us the clues as to kind of the next directional move. So that's the market. And now let's move on to some of the other important markets out there. I do want to talk about the VIX in a moment, but TLT is something that's interesting here. So this is a weekly chart of the TLT with our smart trend filter applied. This went negative here back in October, right? So and this is the weekly smart trend filter. So generally speaking, that is the direction. Whatever we see, green or red, when we have those directions called out from that filter, that is where we basically expect price to move, but it's also where we would expect surprises to happen, is in this case to the downside. And I think today, or this week rather, being a 2.61% down week is pretty negative for the TLT, right? This isn't Netflix or some small cap high growth stock. This is long bond fund, and 2.61% move is a pretty good size move. So, and it's coming after a lot of prior weakness. But that's occurring right now. And on the daily chart, it's just in alignment here. So it's starting to get pretty oversold on lots of levels. We'll talk about that in a moment as well. I do want to look at the VIX as well. So let's actually just kick it over to some of these individual price action charts. If we look at TLT, you can see again, this was the big level. This was the 155 breakdown. We spent a lot of time in here talking about this back in the end of December and November, and I'm sure many of us were sort of sick of it, just hearing about TLT and how it was getting very tight and getting close to a decision point. That decision point and that breakdown is still kind of expressing itself, because ever since we broke down, it's been weak ever since that moment. So when we look at it here, I think, if you're brave and if you're tactical, or if you're longer term, so full disclosure on some of my discretionary, like longer term accounts that I'm not looking to trade very actively, I added to some TLT this week in that, in that basically a retirement account that I'm not looking at or trading that active. So that's a plan for, or an allocation decision that I'm making for a slightly longer term view. But that starts to make sense, I suppose, depending on your outlook, as prices continue to get pretty extreme to the downside. Obviously, we could continue to sell off even more. If rates continue to go higher, then expect TLT to go lower. But it is pretty sold off here in the near term. We'll see if that matters heading into next week. We'll see if there's a meaningful sort of capitulation type event that happens next week. But for you, either dip buyers in the very, very short term that are tactical and have some experience, something to pay attention to. Longer term allocations as well, something to potentially rebalance into if that's your cup of tea. So TLT, that's kind of what we're looking at. Again, from an intermediate term basis, then it still looks like it's in a very tough spot until it's back over 155 in terms of true momentum. VIX is something else I wanted to mention. So VIX here, had for the toughest time kind of having trouble sort of staying below, the mid 20s for quite a while over the past year. And then it recently has started to get very comfortable with the low 20s. And in fact, we got a couple of brief prints into the 19s. Yeah, I think we did on just like 2 days back here. But the VIX was up 10% this week, but still not that much. And doesn't seem to be that much concern in the air. And I know that's kind of a funny statement because the VIX is at 20, and that generally speaking means that there's some concern in the air. But for this past year, a 20 VIX is actually quite low. And so it's interesting here that the market's not pricing in a lot more fear. So you can take from that with what you will in terms of a signal. If you want to be a contrarian, you might think that the market's underpricing risk right now, and that if rates continue to push higher, that could put pressure on stocks, and we could see a more meaningful sell-off happen. So that's kind of an interesting dynamic that's going on. But 21 VIX, we'll see. We'll see how that pans out next week. Again, not really getting any comfort into the upper teens yet for this market. Now, wanted to touch on natural gas. Natural gas here, you can see getting that rally going on. We mentioned it's been up pretty strong. Has had lots of trouble putting in any type of meaningful bottom. As far back as I can scroll here, we've been in a long-term downtrend, so it's tough to say this time is different. I just think natural gas is almost a perpetual trading vehicle. It's just tough to really allocate into this for a long-term hold. So if you're in it and you're playing this momentum, that's probably the way to do it. But I would have stops in place and all that good stuff that we should have on the top of our head. So I think that's it in terms of major markets I wanted to mention. Let's look at, I pulled up and was going to curate and run through a couple of the industries. So this is specific industries that did really well this week. So basically the best performing industry, and the first one here is copper. So copper had 8% week. Remember, this is an industry, it's a basket, so it's a TC2000 basket, industry basket. So, in this case, there's only like 5 stocks that are in this. So Freeport-McMoRan, clearly one of them, and one of the biggest, I suppose. So that was one of the top industries. Aluminum, so again, the basic materials all doing very well this week. Heavy construction, right, doing very well this week. So you can see a clear kind of theme. You also had department stores, which were showing up here, up almost 4.5% this week. So if we look at some of those stocks, you're looking at things like Macy's and Nordstrom, etc. So those were doing pretty well this week. And luxury goods, so more kind of cyclical store luxury goods, and then some of the energy industries, oil and gas, refining and marketing specifically, kind of coming up here, but there's other energy plays that were doing pretty well this week. In terms of the downside, so again, what we're looking at this week, defensive areas of the market. So Confectioners here, if we look again, there's not a whole lot to this space, or this index doesn't make up a whole lot. It's basically dominated by like Hershey's, which was down pretty abruptly here on Friday. So that was one of the worst performing. We also had more defensive, like the soft drink space. So if we're looking at some of these stocks, you're looking at things like Coca-Cola and Monster Beverage and PepsiCo, etc. Packaged foods. So again, you got a little theme here of that defensive area of staples and the like. Tobacco in here as well. Utilities in here as well. Defensive again. Household personal products. So you're going to see things in here like a Clorox that had a tough week. So that at least gives a little bit of flavor, a little bit of color as to the specific sort of granularity of what was working, what was moving this week in terms of up and downside. So obviously could spend a lot of time looking through all of these, but that gives you at least a little bit of taste, a little more specific taste at some of the markets that were moving. So that is what I've got for this week's video. Feels good to be back after missing a week, had some traveling, so getting back into rhythm. And as always, thank you so much for tuning in and watching. We do these every Friday, so do subscribe to our YouTube channel or follow us at The Trade Risk. You can always find all the videos posted there on the blog. So with that, have a great weekend, and we'll see you next week.